Hey guys, Crypto here with a new YouTube video. This one's specifically going to be talking about Bitcoin and the idea that we may be at the end of the cycle. We've been seeing chatter about this on X for the last few weeks. Bitcoin has barely corrected 14% from the highs, hasn't even hit 20% off of the highs so far, but we have a lot of chatter about people saying why they believe that this is probably the cycle top, or why they think there's a high likelihood that we have seen a cycle top. So in this video, I said I would talk about my view, my perspective on that. Do I believe that we are at a cycle top? How likely do I think that this may be the case? What are both the bullish and the bearish scenarios? We'll cover everything here in this video. And the focus of this video is primarily to talk about Bitcoin. I am going to be traveling next week, and so I wanted to get this out before I left. Quite possible that this video will focus on Bitcoin and we'll go more into depth and do other altcoins for the next video once I'm back in town. But for now, guys, let's talk about Bitcoin and whether or not this may be the end of the cycle. Before we get started, guys, I did want to highlight that I do still have to announce the winners for my recent Woo giveaway of $2,000. I got sick almost basically at New Year's, had to cancel my New Year's Eve plans because I got sick. And so I was supposed to announce the winners for this giveaway on the 1st of January. It's a little bit past that, obviously. I am still going to announce the winners, so do keep an eye out on my X for the announcement of the winners. Again, if you signed up to Woo using my ref link at any time over the last few months, you are eligible to win, and 4 of you guys will each win $500, and those winners will be announced here soon in the coming days or within the next week or so. And also, guys, following that, I will be launching a new campaign, a new multi-month campaign for referees that have signed up to either Woo or Bybit using my ref link. We'll be giving away a lot more than $2,000 in that one, so keep an eye out for that. Details will be coming shortly after I finish wrapping up the winners of the current giveaway. With that being said, guys, let's go ahead and jump right into it. So this is the bullish scenario of Bitcoin, and just to give you guys an overview of the context of this, if you haven't yet seen my last YouTube video, I recommend watching it to kind of get caught up. The first, I think, like 5 or 10 minutes of that video covers the macro picture, the macro view of the chart, what leads up to this particular portion of price action that we're seeing now, and it's part of the equation here in understanding what I'm talking about. So if you're confused about where these annotations come from or what they mean, I recommend watching the first 5 to 10 minutes of my last YouTube video. That'll kind of get you up to speed. Now, for those who have seen it, then you obviously know that we've been tracking this as a potential impulsive move off of 58K, completing what we believe is our first wave to the upside of 5 of the final 5th move in what is a multi-year cycle. And so by this logic, we're working on the subwave 2, and we still have, by this logic, another 3rd wave to the upside, another corrective structure like the one we're seeing now, and then a final 5th of the 5th of the 5th, a final blow off top to the upside that completes this entire move, this multi-year move, and more specifically completes the 5-wave move that began off of 58K. So I'm going to quickly play a small short clip from my last YouTube video, just like a 30-second to 1-minute clip to kind of get you guys up to speed with what we talked about in the lower time frames in that last video, and then we'll continue with where we are today. We either don't make a lower time frame impulse here. You can see that we're kind of pushing above the highs of the 3rd wave here, but it's really choppy right now. Let's say we just go like this. We just kind of push up a little bit here, and then we reject, right? So then we don't quite have a 5-legged move to the upside. We have a 3-legged move, another 3-legged move down. That's corrective, and that implies that this 3rd wave may not have started yet, right? And we get confirmation of that on a break below 92.3K. In that case, it implies that this next 3rd leg, or the next major impulse to the upside, isn't yet ready to take off, and we have to be more patient, and we could be getting a larger corrective structure here. All right, guys, so the place that we were at in that video, in the context that we covered in that video, we were right around this region here. And this is where I specifically said in that video that you guys just watched, that little clip, that if we simply go up and take these highs and then melt down, right? So the green section that I had in that video was right here. And so I believe I said that if we simply go up and then clear these highs and then melt down, then it means this was a corrective move, and that means we're not ready yet to impulse to the upside and to continue for the next major leg. And we get confirmation of that on a break of 92.3K, which followed shortly after this fake out that we saw, essentially, right? So we hit 92.3K. That kind of confirmed that we're not yet ready for the next impulse. And as you saw in the video, I said we'd have to be a little bit more patient. And as you can see, what followed has been essentially more corrective, ranging, choppy price action, okay? So that tells us that we're not yet ready for that big move to the upside yet. We still have to wrap up this correction. It's not quite done yet, okay? So following from that video, from that clip, with that being the context of the current move, what has followed that all has been corrective choppy price action. We have not yet seen the start of an impulsive move that would signal that this next major leg to the upside has begun. So right now we're working on this corrective structure, and as I previously stated in that video, we don't know how low this corrective structure could go. Okay, keep in mind that off of the highs, we've only thus far seen, at this point now, a 17 to 18% correction, which is totally healthy. People are freaking out about the move down so far, and it's very, very normal in terms of depth correction. So there's nothing to be freaking out about at this point in time. I'm not quite sure where people are getting the idea that the cycle top is in with such a small correction that we've seen so far, but I think people are overreacting to the current correction. Okay, with that being said, it doesn't mean that the correction is yet over, and we could certainly go lower. And to be very clear, because the origin of this potential leg to the upside was down here at 58K, if this really is the start of the final leg of this bull cycle to the upside, then technically our invalidation is down here at 58K. That means that we could move down into the 80Ks, into even the 70Ks, and it wouldn't invalidate or break this higher time frame structure. Okay, and that's a key thing that you guys have to understand. With that being said, the strongest area of support on this chart in terms of the macro or the higher time frame is still going to be this 72K level that we had marked off earlier in prior videos. This is kind of the most significant area of support, 65 to 72K on this macro high time frame chart. And so if we were to bleed down, either we expect to bounce before this zone is met, or if this zone is tagged, we would expect us to hold here if we are really bullish here and the final leg to the upside has begun. Okay, so on the low time frames, again, we just continue to chop about in a corrective manner, which, as I mentioned in my previous YouTube video, will be good for certain alts. Obviously not all, but certain alts will benefit from this chop. And on the higher time frame, there really isn't anything to be concerned about, even if we somehow manage to push into the 70K region. Okay, and that's kind of the key takeaway that I want to emphasize here. So there's no reason to be freaking out with the current correction. It's well within the range of what's considered normal, and we could certainly see lower. Doesn't necessarily mean that our correction is over yet. In fact, we don't have impulsive price action yet visible, so odds are it's probably not finished. But again, the chop here on Bitcoin is ultimately just going to be a good thing for specific alts that are in situations to pump right now. And we obviously know what those are if you follow me on X. And if you don't, I mean, you should actually. I talk about them all the time. CRV, XRP, etc. That look very primed on lower timeframes and on higher timeframes to make some moves as long as Bitcoin doesn't steal the show. So the choppiness on Bitcoin is ultimately good for alts like that. For other alts, it's not going to be good. For alts that are weak right now, they may continue to bleed. But for the alts that I typically cover, this is definitely not a bad thing. Now, with that being said, again, Bitcoin could certainly move up here. On the lower time frames, I've been watching these equal highs that kind of remain untapped. So there's a chance that we push back up to that zone right here. Below us, we have like a larger gap right here below, I would say 85K or so. So if I go to the daily chart, you can see the gap here, right here. The point is that we have kind of what you'd call like a liquidity void down here. So sometimes we'll go down to grab liquidity into these gaps, and that gives us around 86, 85K. You can go to the higher time frames and you can see this gap gets bigger, obviously, on the higher time frames. And so again, the key area of support is the origin of the big move to the upside, and that's kind of the focal point of support. Doesn't mean we have to necessarily go there, but if we do get there, this is the best risk to reward for long. So you'd expect us to bounce aggressively off of these regions if we get there. But a lot of times, depending on how bullish the market is, we may simply dip into the inefficiency and then reverse from there without actually getting to the origin of the aggressive move. So sometimes that would happen, something like this, as I've depicted. In any case, guys, I don't think it makes sense to be freaking out here about the cycle being over. For all intents and purposes, this is a healthy consolidation after a pretty aggressive move off of 58K. And keep in mind, we had what was like an 8-month consolidation here, and we've just started expanding from it. So even if we were to come back down and retest, this would be a very bullish area to expect to bounce, which is what I'd expect myself, and then expect continuation up to complete this cycle. All right, and one more thing I'd like to also point out here is that even if we do manage to get to this green zone, again, assuming that this move started at 58K, what could very well happen, and I kind of covered this in my last YouTube video as well, but if we do manage to get to this green zone, it's possible that we create like a very complex wave 2 that could look anything like a tightening triangle structure, could look like a number of like consolidation structures, but ultimately what would be happening here if we were to tag the green zone is odds are we'd be getting a wider base to form in anticipation of these very aggressive third waves and fifth waves to the upside. So I want to again emphasize that time is not drawn to scale here, right? Time and price not to scale as I've shown in this chart. It's just to show you that if this is an impulse off of this level at 50K, we're still missing two major waves to the upside that haven't yet occurred. Now, these could take obviously longer than what's depicted here. They could be shorter in terms of price. If this is the case, I'm looking for at least 150K minimum, but no higher than 300K. So you'd expect this fifth wave to end somewhere within this range, with the bare minimum being 150K. And we'll know more of that as price action develops. If we don't get a sharp dip like this, an immediate impulse to the upside that begins on lower time frames, what we could be seeing is a more drawn out correction that could take a number of shapes, but ultimately what would be happening is a stronger base forming here for this aggressive third, fourth, and fifth wave to the upside. And what that would look like here is, again, some sort of corrective mess or chop within these regions. Okay, this assumes that we come down to test the green region, which, again, I don't really know how likely that is. Like I said, we could just dip here just into the 80Ks and then reverse. But again, this is assuming a more bearish scenario where we're going to come back down to this very significant area of support. We could then form something like this structurally, like a tightening corrective structure, before that aggressive third, fourth, and fifth to wrap up the cycle, right? And so you take this off a log scale and you can see how that looks like a very aggressive parabolic advance. And so this sort of tightening would just be consolidation before that aggressive expansion. You've already had nearly a year of consolidation before this move began. So by all means, don't think that this is necessary. But as I always say, and as you guys know, the longer the consolidation, the greater the expansion. And again, the idea is if the rate of ascent of this move to the upside, this final leg, is going to be more aggressive than anything that we've seen so far, which it should be, and if we really are going to see a parabola forming or a parabolic advance, then it's going to be incredibly aggressive to the upside. And so if we do happen to base for a couple more months to get that move, it is by no means a bad thing, and it just means that this move will be all the more aggressive when we do break. So yeah, a couple of scenarios here. One is that we make a deep correction, or I should say a quick correction down maybe into the high 80Ks, and then see a strong reversal of the upside when we begin our third wave. The second is where we melt down to the 70Ks, the low 70Ks, and in that case, again, doesn't affect anything unless we break below 58K. So we'd still be very bullish even in low 70Ks. But if we were to go down that low, I think it'd take a little bit longer for us to chop around before we started the expansion. And then finally, the most bearish case, which I hold at a much lower probability right now, would be that we break below 58K. And at that point, the argument would be that the 5 waves to the upside have officially completed. Now, what I want to emphasize is that even if that was going to happen, we still expect at least some sort of a bounce off of the green zone here at 65 to 70K. So maybe instead of this sort of a triangle that breaks to the upside, maybe we get something a little bit different. Again, this is the very bearish case, and this is the one with the cycle top being in, and this is the one that I find to be the least likely. But let's just play devil's advocate and say if we were to get something like that, what we would probably see, and this is kind of what we saw in Bitcoin at 6K before our breakdown at 3K in 2018 for those that remember, but some sort of a corrective structure here consolidating above this area of support, getting weaker and weaker with each bounce, and then melting through. And in that case, what would still happen, what we'd still expect to happen, is during this period of sideways chop on Bitcoin, we'd expect money to distribute out of Bitcoin, to flow out of Bitcoin and into altcoins. Keep in mind, if Bitcoin is topping here, right, again, very unlikely in my opinion, but just to play devil's advocate, if it is topping here, then the idea is that money is getting pulled out of Bitcoin. This would be then a distribution top, and during distribution tops, the big boys are taking profits. They're selling Bitcoin. So again, what typically happens when Bitcoin distributes, and we've seen this in prior cycles, is that when Bitcoin distributes, money then flows to altcoins as profits are taken on Bitcoin and pushed into little coins that can pump a lot easier, that can make a lot more money in a much shorter time span. And so we get an alt season. So even if we're in the most bearish scenario that one can imagine, which is that this is a top and the final fifth wave is complete and we're breaking down, we would still expect a massive alt season to occur somewhere around this region here. And again, it's similar to what we saw back in 2018. Keep in mind this image, a leg down, consolidation, and a breakdown. If I go back to 2018, which was our last cyclical top, this is kind of what happened. Bitcoin topped, came down, we saw distribution here. Alt started going crazy actually a week or two after Bitcoin topped. And you can look at Bitcoin dominance, you can look at altcoin market cap. I believe, if I'm not mistaken, altcoin market cap tripled after Bitcoin had topped here on the 17th of December in 2017. So altcoins ran after Bitcoin topped. Even XRP saw one of its massive runs after the Bitcoin top. And so this period of consolidation, or I guess after the top was in was a period when we saw a massive alt season, and then we had this consolidation and then the final breakdown to end this particular bear market. And during this consolidation as well, we saw kind of like a mini alt season amongst choice alts, select alts. Again, point being is that if Bitcoin has topped, then we are likely to see a few weeks of distribution at least. And in that time, we should be seeing alts going crazy. We can just take a quick look. Remember the date here, December 17th of 2017. We'll take a quick look at Bitcoin dominance, and we'll take a look at that same date, December 17th of 2017. Bitcoin dominance was at 61% when it topped. And from the 17th of December till the 13th of January, in the next month, Bitcoin dominance would fall all the way down to 35%. Why? Because alts started going bonkers as money from Bitcoin pushed into these altcoins. And we saw a massive increase in altcoin market cap, which sent Bitcoin dominance down almost 50%, down to 35% from a high of 61 when Bitcoin topped. So this was our major alt season back here in 2017. As you can see, it was the biggest drop in Bitcoin dominance that we've yet seen. And if we go to where we are today, you can see we have not yet begun the drop. And this is a chart from a while ago, and I've said many times how until Bitcoin dominance drops below 35%, we've not seen the end of the cycle, right? So again, we still haven't even begun the major alt season. Even in the most bearish scenario, if Bitcoin has topped, I expect we see a big alt season. And so our alts should do very well. Of course, depends on which ones you're in, but the alts that I've chosen, I think will do very well. And hopefully the ones that you've chosen will do very well too, but we'll see a major alt season, and that hasn't happened yet. So even assuming the worst case scenario, even if this is the cycle top for Bitcoin, it doesn't really matter for all intents and purposes. We've talked about how in prior videos, at this stage, the best ROI is on altcoins, not on Bitcoin. So whether Bitcoin has another leg up to 150K plus or not, for this particular cycle or what's left of it, the best ROI regardless is going to be in altcoins. So even if Bitcoin has not topped, I'm still more interested in catching moves on altcoins here. And if Bitcoin has topped, I'm still more interested in catching moves on alts here. Alts should outperform in either scenario regardless, right? So with that being said, guys, again, I don't think that the top is in on Bitcoin. I do think that we've probably finished the first leg of 5 on Bitcoin, which means that I think the next 2 legs or the next 2 waves to the upside have yet to come, and those should be the most aggressive. Before that happens, we may correct a little bit lower, maybe down under 84, 85K, maybe even into the low 70Ks. In either case, it's nothing to be fearful of. If we do get it, there should be a good buying opportunity for specific alts. And I think that in the coming months, if we really do have, again, the bullish scenario where we've completed the first wave of 5, then that means the coming months should be very, very explosive. Again, we do need to see this corrective move wrap up, and that could take some weeks or even a month or 2. We don't know how long it's going to take yet. But when this corrective move does complete, we should expect another leg to the upside. At the bare minimum, this was a move from 58K to 103K, so about a $40,000 move. So at the bare minimum, that next leg up, when it does come, expected to be at least a $50,000 move to the upside, which means if our correction ends at 85K, then we can expect the next leg to take us up to 140 to 150K at least, after which we then expect another corrective structure like the one we saw here. And after that, we would then expect the final leg to the upside, which should take us possibly into 200K plus territory. So I hope that all makes sense, guys. This was a quick, short, and sweet video, but I hope you guys enjoyed it. If you did, please like, share, and subscribe, and I'll catch you guys in the next one.